What is up, everyone? It is Josh, the unconventional money guy. And with things going a little crazy in the stock market right now, been getting a lot of questions from investors on where are the best places to put your money. So a lot of people have been asking me what's been going on with the stock market being down, over 20% this year. However, if you are a more conservative investor and you've had a lot of bond positions, your bonds are even down double digits this year. So it's leaving people scratching their heads. What the heck do I do? Do I stay the course? Do I sell everything? I really don't know. Because with that, people are just, most financial advisors are just like, hey, like, stay the course. We have the strategy, stay invested and yada, yada, yada. Well, 2022 is much different than any other year because interest rates are rising. In which interest rates rise, that causes bond prices to go down in value. And since interest rates have gone up so quickly, bond prices have gone down with it. And bonds are only yielding probably 3 to 5%, depending on what kind of bonds that you're having. So you got to start thinking about, hey, how much are my bonds down? Or am I down 10% on my bonds? If I'm down 10% on my bonds and they yield 3%, if you get no appreciation from those, it's going to take you over 3 years to recoup that investment. So, where are areas you can be looking? Well, rather than going in the bonds, you can look into dividend paying investments that are going to generate cash flow and give you some sort of income, but at the same time, give you the growth that you're looking for because right now everything's at a significant discount. We've been in a bear market for nearly a year now. It's going to end. And when it ends, you're going to wish that you were on the growth side of things, not the conservative side of things. Because ultimately, in the end, the stock market is a growth position. And you want to be in a position of where your assets are growing. Because with inflation being so high, taking the conservative route is actually most likely less beneficial because if your money's not growing with inflation, you're just going to be losing and losing and losing value. So I would implore for anyone who has bond positions or have entered in the bond positions to reconsider their strategy, start looking at where the opportunities are to get that growth moving forward in their portfolios. And ultimately, in 1, 2, 3 years, we definitely are going to be seeing the dividends from that because the market's not going to go down forever. We all know this. This is why we invest. Right now, it's been painful, especially for new investors. If you just started during the COVID times, your accounts are probably almost down to where you started. But don't lose hope. Look for the opportunities. There's lots of opportunities out there. And if anyone has any questions or anything, I'm always happy to be a resource to help you to take you from where you are to where you want to go. So I hope you have the best day. And that's my spiel on bonds. Bye bye.